Hello traders and welcome to another video review. Today is Friday, January 26, 2024. Let's take a look at the Forex calendar for today. Overnight data from Japan in form of the Tokyo core CPI and CPI excluding food and energy has been worse than expected. The further deterioration has been seen in the CPI of the Tokyo CPI, so it looks like we will have to take a look at the Japanese yen. Monetary policy meeting minutes has been published as well. As we can remember, last time the Bank of Japan left the interest rates at the level of minus 0.1% as expected. German consumer climate data has been published already, and we have a further deterioration from minus 25.4 to minus 29.7, so not a good bunch of data from the Germany as well. At 10:30, German Buba Balz will give a speech, and then there is a gap until key event of today is scheduled for release at 2:30. Core PCE price index and pending home sales from the US. Together with the PCI price index, there is a core PCI price index, quarterly PCE price index, and personal spending. Wholesale sales from Canada are scheduled for release at the same time. And 2 hours later, we got Atlanta Fed GDP now. And at 7 o'clock, we got US Barker Hughes oil rig count and total rig count. So not that full of important data, almost empty New York session, but pending home sales and PCE price index data, very important data, might give markets a little bit of the volatility, so please stay vigilant during this data release. But because of the JPY data, Japanese yen data release, let's take a look at the charts. US dollar versus the Japanese yen 4-hour chart is showing us not much actually, because this market has been moving just in this very tight range for at least 2 days already. Look at this. We got this level here. I've lost my line. There you go. This level here, 147.96, is definitely technical resistance, intraday technical resistance, and we got the lower range low 147 and 10. And as you can see, the market keeps pushing to the upside, maybe because the market is hovering around the level of 50 on the RSI, and it wants to go basically higher towards the 50 periods moving average. Nevertheless, still nothing. So the bulls are trying to push it to the upside, but nothing is happening here just yet. And the data didn't trigger any move either, if you consider the fact that there was a very big deterioration here in the data. So still nothing. Not really a market mover. For the US to the Japanese yen, maybe the US data will give us a little bit more of the volatility on this market. So US dollar, Japanese yen trading inside of the range, waiting for a decisive breakout. As usual, let's take a look at the euro dollar because of the data that are coming through, and there is something different here on the euro dollar. Maybe it was because of the German data release, but we got a breakout to the downside. Again, momentum is negative. Room to the downside. Room to the downside. Next target for Balz, 1.0743, 1.0734, and 1.0724. This is the zone where the market should see some sort of the support. Of course, the dashed black line is Fibonacci retracement. This was the 50, and this is 61% Fibonacci retracement. All of these levels here, like 1.0818 and 1.0848, will now act as the technical resistance. So the situation is getting even worse for the bulls, because the key technical resistance, 1.1020, still not touched. Instead of this, we got bearish engulfing again bearish engulfing again, bearish engulfing here. There is plenty of bearishness on this chart, and as you can see, bearish pressure is increasing. Let me just show you this target level. This is the next target level. All right, so that's the low from the 8th of December 2023. It looks like this market wants to get there, maybe even before the weekly close. So please stay alert, stay focused. Euro dollar moving lower. So the euro dollar moving lower, what should go up? Should any other technical markets go up? Let's find out what is the S&P 500 doing. And as you can see, the S&P 500 on a 4-hour chart just moved lower from the local high and the swing high, an all-time high at 4,900 and almost 3. All right, so we are testing upper channel line. So let me just zoom in a little bit. But if we take a look at this current market conditions, those market conditions are extremely overbought. The market went lower after the open. All right, so we got this 4-hour counter testing this upper channel line. Let me just ensure that this is going here. There you go. So we are testing this upper channel line, but there is no breakout. So the market still bounces up and up and up from this channel line. Maybe the 4,902 points level will be challenged again. But it looks like the market needs a pause. The market needs some kind of a pullback to the downside in order to continue the up move. So it looks like the market is right now trying to move. There you go, ahead of this potential. Remember, potential ending diagonal. So we got it here, and now this upper level, okay, we broke above this level, but it doesn't mean actually that the ending diagonal is not is not valid anymore, right? We got the wave A, we got potential for the wave B. Now we need wave C, D, and then or 1, 2, 3, 4, 5. It doesn't matter how you count it. You need 5 waves inside of the ending diagonal in order to get this movement to the downside. So still waiting. Crucial level that is here for the bears is basically this technical support. It looks very, very nice. 4,864. That's the one level. The other level is just right the corner, 4,842. So this zone is very, very important. Any breakout below this zone might likely end up with bigger sell-off in the short term, and then maybe we will have some sort of the corrective cycle developing in the higher time frames. So that would indicate a completely different shift on the S&P 500. For now, we are still trading above the upper ending diagonal, potential ending diagonal line, waiting for a decisive breakout. And last but not least, the Bitcoin. What is Bitcoin doing? Well, doesn't actually look like it is doing much, because we went towards $38,000. The low was 38,511. We bounced a little bit. It wasn't like a very shallow bounce. It was quite nice one, a few percent, like 5.24. So that's the standard, very nice. The bulls tested the 40,000 level, right? 40,530 was the high, and since then we are inside of this very, very narrow range, just hovering below the level of 40K. Momentum wise, horizontal trend just touching the level of 50. Let me just put my level of 50 on the chart. So the situation here is exactly the same. The bulls are trying to break above the level of $40,000 and above the level of 50, because that opens the road straight on towards the highs here, 42,100. All right, which is why they are fighting for this opportunity, and you know, can't blame the bulls for doing this, of course. Now, the situation with the market on the 4-hour chart looks like this. Let me just switch to the daily, because I would like to show you guys that we are approaching the extremely oversold market conditions. Okay, there is no indication here about any potential candlestick pattern. Those candlestick patterns labels are from the 4-hour chart, so there is no indication here. But big breakout to the upside, and basically plenty of the bears will be surprised. Of course, big pin bar reversal candle, this one, and then confirmation and extension, classical, let's say, setup for shorts, paid off very, very well, because it's from the top to the bottom, there's over 20% to the downside. So so this was absolutely 100% valid setup. For now, we are trying to break a little bit higher, just bouncing from the 50 periods moving average on a 4-hour chart, trying to break above the 40,000, maybe towards the first the 100 period moving average 41,683, then the highs of the 42,101, and then we will see if there is no upside movement on the Bitcoin. We will likely deteriorate further towards 38,121. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye-bye.